Well, hello, traders and investors. Today is November 12th. It's a Thursday. It's the day after, what is it? Veterans Day. I can't keep track of these holidays. The year, believe it or not, we've got less than 2 months to go. Now, I looked at the global outlook this morning, and I'm going to tell you something. I'm 100% in agreement with this. Finally, we're starting to ask the right questions or talk about the vaccines, the upside, the downside, which leads me to believe that stay-at-home stocks are going to make another run for the upside because people are really starting to think ahead. When am I going to get the vaccine? How is it going to come to me? I'm starting to see that in the news, which means it's being reflected in the market. Whenever you see something in the news, it's already being reflected in the market. So let's talk about global economy. Then I'll give you the strength and weakness of sectors, tell you the big report that's coming up in about 20 minutes, and I'm going to give you 3 hot stocks. Pretty good deal, right? I kind of like it. All right, let's get into it right now. So world stocks, they fell back on Thursday. The Dow Jones, I believe, is down about 150 points. The market's going to open about an hour and a half, so don't quote me on that number. It fell back Thursday after overnight comeback by big technology shares that have thrived during the pandemic. That's very, very important. That's big, 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 because that's the first time that's happened in some time. Remember, pandemic, when people get concerned, large tech starts rallying. Why? Because those are the big stay-at-home stocks. They have a lot of market capitalization. And industrial basic material stocks, which have been leading, which someone's been telling you for months on end, they're going to start leading and tech is going to fall behind. But again, it's a battle right now between the industrial basic material sector and the technology and the consumer discretionary sector. Stay-at-home economy, technology, consumer discretionary sector. Vaccines working, we're getting it tomorrow. I'm being facetious here. Welcome back to industrial basic materials. So we're kind of shuffling between those two modes, the stay-at-home mode versus the let's get out and have some fun mode. It's the market cycle, so to speak. So that's kind of what the market is talking about. And it's interesting because the market was a month ago just talking about vaccines coming out, everything's going to be fine. But now it's getting into details. And that's when people start talking about these things, that's when it starts to materialize and price its way into the market. So excitement over news of potentially effective vaccine, COVID-19, has been tempered by concerns over logistic challenges. Perfect. Of ensuring access to billions of people. You see, for the first time, how are we going to get it? Who's going to get it first? See, we weren't asking those questions. And remember what I always say, till we start asking the right questions, we're not there yet. And for the first time on the global news report, we're starting to ask the right questions, which means it's being priced into the market. Meanwhile, and this is why, because the rates are rising. So people are like, when are we going to get it? How are we going to get it? Who's going to get it? It's starting to materialize. This information is starting to make its way into the market, starting to be priced in, for lack of a better term. Meanwhile, caseloads are rising, leading governments to reinstate restrictions on businesses and other activities to battle the pandemic. Vaccine trades reversed to give away to stay-at-home trades. Right there. Very, very simple. Economy's growing, stay at home. Economy's growing, stay at home. So these are kind of like the battles we have to watch right now for. And we're pretty familiar with the stay-at-home stocks that rally. We've been trading them for the last 7 months. So just keep in mind, that's the world we are in right now. We're in between these two twilight zones, if you will. So vaccine trades reversed to give way to stay-home trades as shares of technology companies and others that do well when people stay at home and work remotely rallied. But it added, fact of the matter is, progress on vaccine development is at worst, 2 steps forward, 1 step back, and 1 step forward and 2 steps back on a sustained basis. So this is all very important right now. This is kind of what the market is tempting with, kind of getting away from the election a little bit, which is so good. Chinese technology shares have taken a beating this week, losing about 290, probably a little more, probably about 310 billion in market capitalization after the government issued new proposed antitrust regulations for digital industries. Investors, they've embraced hopes that one or more of the COVID vaccines could help COVID corral the virus by the second half of the year, encouraging people to return to life as it was before the pandemic. Folks, my own doctor a week and a half ago just told me minimum 6 weeks for normal, healthy people. All right. And again, that's what we're dealing. I can go on and on and on, and the markets are still fighting over elections, but they're starting to turn back to the real world. It's hard for me to gauge the markets based on who's going to be the president for the next 4 years, because nobody, even the presidents themselves, don't know. I don't even know who the president is. Is it Biden or is it Trump? So I'm focusing on things that we do know, and it looks like the market is starting to come back to reality. And moreover, it's asking the right questions. You see, this is what I was waiting for. The climate up to, for those of you who don't understand exactly what I'm talking about, this is really important. Before today, the climate was vaccines coming. Oh, that's it. The world's going to be back to normal. We snap our No. And I've been telling people it doesn't work that way. People aren't going to be going on cruises. People aren't going to be going on business travel, which makes up about 70% of all the moolah that the airlines make. So don't believe the world is just going to snap their fingers back and everything's going to be back to normal. We're going to start going through things like, which vaccine should I take? When am I going to get it? How am I going to get it? Do I want to take it? Is it going to be more? See, we have to kind of go through that, and we haven't gone through that yet. And actually, for the first time today, we're starting to the world is starting to take that into account. And here's the news. The more we take that into account, the more we realize that this is not coming right away. It's not going to set things back to motion right away. And we're probably going to have another year or maybe more of this stay-at-home environment, which means stay-at-home stocks, folks, are going to rally, and we're going to stay in the same climate we've had. Now, I'm sorry it took so long, but this is really, really important. But it also gives us a little edge and kind of figure out what's going on. So, as far as sector strength, industrial, basic materials, it's either going to be these two or technology and consumer discretionary. There's just no two way around it. Either we're expanding. And you know, when a new president or a new presidential term, that's when the president rolls out all their big plans. And then over the course of the 4 years, they try to fulfill those plans. So over the next few weeks or a few months, not a few weeks, excuse me, about a few months, we're going to start seeing, hey, these are my plans. And I'm going to tell you something, folks, and this is huge. Whether Biden wins or Trump wins, I don't care if we're going to build a nuclear energy plant or we're going to build a evergreen energy plant or a pot factory. These both building take industrial and material. So it doesn't really matter which way we go. Those sectors are going to move forward if the stay-at-home economy subsides. Okay? So you've got a battle of these two evils, if you will. I don't know if you want to call it that. But you've got industrial basic materials, which are like this, obviously. And then you got technology and consumer discretionary, which are also kind of like this, like Amazon, Apple. Is it technology? Is it consumer discretionary? Anyway, I've said enough, but you guys understand exactly what I'm talking about. Now, we're going to have jobless claims and CPI. Jobless claims are going to be really important because we need to break below 700. Why? Because we've been stuck between 1 million and 700,000 new claims now for 7 months. And while the number's moving lower, it's moving lower very, very, very slowly. And that's not good. So I would love to see a number below 700. It may start happening if we start seeing more industrial and economy break loose versus the technology and consumer discretionary, which people have adapted to buying and using by themselves via online. So consumer discretionary and technology, stay at home, stocks. Industrial basic materials, a little more expansion stocks. So again, I'm just trying to point you into the right kind of which way we're going to go. But again, stay at home or expansion. Stay at home or expansion. That's kind of where we're at right now. And over the next couple of months, I think the world's going to find out that it's going to take us a little longer to get out of this mess. Now, I want to give you 3 stocks. These are my 4x4 patterns. These are stocks making new swing highs and are pulling down for 3 days. All right. We got Auto Home. This is let me just show you the profile. Computer processing, data preparation services, online destination for automobile consumers, primary, China. China is moving. And by the way, between you and I, if Trump does not win, and I'm a Trump supporter, but if Trump does not win, and it looks more and more likely like he's not going to be the new president, China, no trade war, China's going to rally. This stock is appraising this right now, kind of telling you, putting the money on Biden versus Trump. Folks, I'm here to help you make money. I'm not here to be political. Look at the numbers here. Are you going to argue with these numbers? Look at this. 5-year earnings, 279%. 1-year return, 38%. The stock is smoking hot. So what would I do? What would Roger do? I like that. I would buy above the high here, and I would put a sell stop between the swing low. Again, that's Auto Home. Next one. These are all 3 4x4 patterns. Again, swing high and 3 days with the stock making lower highs, closing lower, okay? So now, and then busting out right here. So we have high here, closes lower here, closes equal to lower here, and closes lower here. We go by closing prices here, not by higher highs. So this is the swing high, and then it makes another swing high, which doesn't hurt. So again, we have 3 closing lows and then a higher high right here. I would buy above here, above the 118 level, and I would put a stop right below this bottom here, right, 107.70 level. That's Guardant Health, and if we look at the profile of the stock, we will see oncology, not very related to what's going on in the world right now, and it's a biomed stock. I like these stocks right now. Look at this 1-year return. The average S&P return is 6%. This sucker's giving you 60%. Last, one of the best stocks of all time, Qualcomm. I've been so bullish on this stock. So again, we make a swing high, we make 3 lower closes, and then we rally up again. And I'm looking to buy. I would like to buy actually above the 150 level, and I would put a stop loss right at the 137-ish level. Now, folks, before I let you go, I've got something very, very important. I want you to listen up and listen up good. There's a big, massive, giant, huge opportunity coming to the stock market that you're gonna want to cash in on. I'm telling you, you really want to cash in on this one. It's incredibly liquid stock. It's trading at bargain basement prices. In other words, you can get it on the cheap. Who doesn't like to buy bargains? I love to buy bargains. That's what these 4x4s are. I wait for a new high, and then I wait for 3 lower lows. But that cheap, discounted price is not going to stay here forever. This stock is going to move. In fact, the stock's already on the move, and it could return as much as 9 times your money in the coming days. 9. You know what 9 times your money is? You start with $1,000, you end up with $9,000. Pretty good, huh? I like that. You start with $500, you end up with $4,500. You don't want to miss out. It's on the loose. This stock is on the loose. It's discounted, but it ain't staying this way. It's already moving higher. Click the link below. Check it out for yourself. Do it now. I'll talk to you guys soon. Bye, everyone.